Hey everyone, so this weekly review will start from the short outlook I recorded for one of the one-on-one students. Please look through it so you will know the context for Euro USD, and then I will continue with the weekly recap. Hey Zoe, so I will just quickly give you some additional reasons about why I think this zone is a relatively weaker zone. So we have here a bullish market that shifted bearish and bearish from here. So there are a number of reasons why I think this zone will fail. So actually, if we are talking about unmitigated parts, then it should be like either this one or this part of this week. Okay, so first reason for me, again, not like running around too much, but look at this impulse and on the place that it is coming from. It started with this just wiki price action and then fell to the downside. So this portion of price action is fine, but because of this wiki price action, I don't consider it as a higher quality break. Plus, I would add that definitely these weeks, they actually mitigated everything. Everything that we have here. Now, if we look further, we see that this move came from this up move, which mitigated what? If we look at this impulse, we understand that the main volume that it came from, so we can say that this came from here, and this is like a perfect mitigation, but it would be even better if this zone mitigated it, but it never did. It left this imbalance. So this is like a third reason for me to think that it will most likely fail. Add to this fact that even if this is a start of a bearish wave, like deeper wave, which it can be, it left this imbalance and a very, very nice and logical zone to go and mitigate. Remember, I told you that this first shift to the bearish side usually comes and usually the market can go and clean it up before continue lower. So you see, one more reason. Now, you told about the way how the candle goes into the zone. And I think, yes, this is a reason, but it's like on third or fourth place after the reasons I described. And yeah, it's logical to suppose that if we sustain this movement and price will just like, ran into this zone, then what will happen on lower time frames? It will just be bullish, very bullish. And usually after a bullish wave, what can we expect? Some reaccumulation and just continuation. Yeah, so at this time, and given the fact that it's all mitigated, very likely that we will have at least one reaccumulation and one more burst to the upside. Of course, this plan can fail and it can go down, but it's like we're talking a bit too much in the future, but you know then what to do. You can still follow the zone if it will look like it holds. But right now we are like more discussing the theory. By the way, forgot to mention this important fact that we have 2 days zone. So we have really, really nice. So the impulse is not that good, but the zone is a big volume candle and we are right now mitigating it. The impulse on 2 days. So these are some of the main reasons why I'm looking this zone to be failed. And of course, we don't need to forget that what we are doing here is that we have this wave on daily that right now is did this movement, and it did it like after 1, 2, 3, 4, 5 breaks, and then it's almost natural to suppose that it will reaccumulate, plus it coincides with this 2-day impulse and this not so high quality zone. So you see, all these reasons we can stack up on another, and we can now say that this zone still can hold, but maybe it has like 75% of failing in my eyes and only 25% of holding up. And that's why I'm like more bullish in this specific area, in this specific portion of price action. And of course you can go to 4 hours, and again, by the way, see 4 hours, mostly everything is mitigated. So we had this nice zone. So even if we suppose that this is like a move, so this a daily move, maybe we could find some unmitigated portions, like a refinement on daily to go, but almost everything is mitigated. Yeah, and it's not the complete list of reasons. You can go in this manner and look what it does. But again, it does not need to be like really complicated. It's okay to keep it really simple, and just again, even if daily is not so far from us, it's still pretty far. In the end, you will orient yourself with 4 hours, 1 hour entries, and so on. But of course, these things that I just pointed out on daily, they are perfectly applicable on any other time frame. Now, why I think that this fact that we have 2 breaks almost gives us almost nothing about the prediction if the zone will fail. So imagine that this zone will hold. This price action is completely okay for this zone to hold, because if we want the price to tap, it must become bullish, and this is what it's doing right now. So you see, in my discussion about the zone, I almost never touched this portion of price action, because this situation is still okay for the zone to hold. But given all the facts, I'm okay to be more bullish from here and follow this bigger zone or smaller zone to give it even higher. And then after we will have like 1, 2, 3, 4, 5 breaks, maybe on 4 hours, I will be more cautious and expect some reaccumulation. But then but then if the price will reshift back, I will be more bullish. Okay, so hope this small talk will help you a bit, and then we will continue with more examples, because of course we can add more layers to this analysis, but I will not do it right now. Hello my dear friends, welcome to the next weekly recap. So let's jump straight into it. So this week, as you can see, was like 2 -1s and then 5 break-evens. But what's interesting in these break-evens is that they were stopped out at break-even and then went to like 20, 15, 5, 1.5 and 4 hours. So like the analysis was more or less correct, but I was stopped out due to the news, due to some range of price action, and let's go into the review right now. First trade was for Euro USD, and I think you watched the outlook that I pasted before this, so you should be able to understand why I'm overall bullish, why I was overall bullish from this place. And my confirmations was looking like this. So so I was overall bullish and was looking at these areas. So we had this range that was never broken, like this, and I was looking at this zone for a repeat mitigation. So let's look what we had there on lower time frame. So this was pretty shitty entry, to be honest. Specifically this rangy price action like didn't add too much to it, but we had some shifts on 1 minute in the zone, and I just decided to take this entry on this candle, and so the entry was like this and was stopped out right away. And then while the price was developing, I was just analyzing like straight in time, and I was thinking that once this low becomes broken, the price should fall even lower. And as you can see, like the quality of this entry is just really poor. So it was based on inside structure. So yeah, nothing too special and nothing too crazy. And my second entry was based on this 1 hour fakey candle, or like market maker candle, which I hope I will record a confirmation video about it. But in short, it's just a candle that goes below the previous one, and so below the previous one, and closes in the range of a candle. So what it means is that it is an accumulation on lower time frames. And so let's look what we had on lower time frames. On lower time frames, we had these shifts, and I just entered from this zone, and that's all. And this entry started to work out pretty well, but at this point I went break even and was stopped out later, like this, with this new candle, and then the entry just started to work out, and worked out like all the way to the top, bringing this trade to a potential like 10-20 R, but I was stopped out at break even. But again, I consider this as a lower quality entry, and this week was pretty weird. As you can see on price action, it is rangy. This was the NFP week, like, but basically after the price started to push from the zone, again based on the context I discussed in that overview video, we started to see some bullish momentum kicking in, and as you can see, some not so bad ranges to work with, like this, like this, like this. And what's interesting about them is that, as you can see, we have consecutive mitigations, like full mitigations, and this is really good for price action, because what it means is that market cleans up everything it wants to clean, and mitigates the deeper zones of the ranges, so mitigating everything it wants to and it needs to. And basically after such patterns of consecutive mitigations, we can expect some markups. And so the bias stays the same, and it was the next day we had these ranges, like on 10 minutes, on 5 minutes, pretty clear price action. And then on 1 minute I was looking for these shifts, and they happened. So we had this clear shift, I missed this entry, and then we had one more shift, and I was looking to enter from here. I just entered at this place, so looking for early bursts, but they never happened. And I entered from this place as well. Basically, it did not change anything for me, because like I was stopped out later. So at this point, I was going for break even, and then stopped out. And yeah, so you see, just weeks like this happen, and entries like this happen. So just stopped out at entry points, and just continued higher from there. And so this was like Friday, NFP day, and it just started to burst out. So the next trade was from CHJPY. The context for this trade was like this. We have a bullish market on weekly that created approximately 5 or even 7 breaks to the upside. So what we wanted to see from it is some kind of reaccumulation, and it started to do it. On daily, we had these shifts of structure, which currently, so I was looking like on 2 days or 3 days, I was looking at this move. And yeah, by the way, you see, so I was looking at this move, this kind of like inside structure from this 3-day chart, and I was looking specifically at these areas on daily to hold. So we had these shifts on daily, I was looking on this to hold, and when this the price started to range just in these zones, I was starting to look for shorts. However, of course, we need to understand that what's happening there is that we had this range, we mitigated the zone, and like showed really nice reaction. So overall the target from these charts is this high, and overall the market is bullish, but I decided to try bearish side. And let's check the lower time frames, because this range at the moment was my main range like that I was basing my decision on. So again, we had some like 3 or 4 shifts on 4 hours, and I was just looking for deeper, and this was like the latest shift, nice zone. We were in this zone. I was looking for deeper reaccumulation on 4 hours. Of course, the facts that were playing against all this bias is that at this moment we had like really clear zones just above, so we started a down move, but we still didn't mitigate everything, and combined, so if you combine this with 3-day with weekly bullish, bearish side is not that perfect, but because of this clear shift of structure on 4 hours, and because the price mitigated everything there and started its way down on 5 minutes, on 10 minutes, so specifically 5 and 10 minutes ranges, I was okay with taking it to the short side. And what happened there is, so again, the main decision based ranges were this 4 hours range combined with 10-minute range after the zone was mitigated fully. So with this range, with mitigation of this zone, and this is how the price developed on 1 minute. So I was just entering from the zone, price started to move, I was entering there. One more entry was possible here, but I was entering from here, and when price got here, I moved stop loss to like 0.75 R, like here, and then at this point I moved to break even. News dropped, stopped me out at break even, and then price started to fall to take profit. But what's interesting, you see, it never hit my take profit. Maybe on spread, I don't know, but on the chart it never hit anyways. So like this 528, but maybe like 5R it had. But you see, we had this reaction, and then later in hindsight, I just put a line and decided to check what we mitigated there, and it turned out that we mitigated this really small. So you see this unmitigated portion of the 45-minute, like 45, 51 hour move that happened here. You see, so we had this move and a small portion. So this week we just mitigated it and went from there. And then eventually market just ranged, like worked out from this zone a bit, so showed more reaction, and then eventually started to fail. And right now It's like beyond, even beyond this this range. It mitigated above, and it seems that we can start to see some bearishness, but we will see later. And my last two trades of the week were from US 100. So a quick context for US 100. It's the market that overall bullish historically, but recently we performed here this weekly break that came from this route and recently was mitigated. So right now from the weekly we are looking at this level to be cleaned up, but on the daily we were still holding bullish structure on the moment of the trade, so we are mitigated but still holding bullish structure, and I was playing from this bullish from this daily bullish leg. And in addition to this we had this 4 hours break. So again, for me, like daily 4 hours and then 1 minute shifts were enough to play to the bullish side, because even the weekly is bearish. I think we could easily, and I still think we can see these breaks, and if the middle time frames are aligning, I'm good to take this kind of trades. So daily bullish, 4 hours bullish, and I had refined some zones, so we have like bigger zone, smaller zone, and specifically for the first trade I had this hidden S&D. Why? Because I know that usually if US 100 starts to run, it does not mitigate like lower. Then price came into the zone, and I went to 1 minute. Maybe it's not yet the time for this trade. Yeah, somewhere here. So what we had there is this again. The entry is not that good, but what we had there is like this 15-minute break, and when the price started to fall and then mitigated some refined zone from 4 hours and started to pull back into the range, I just took this entry, and at this point went break even, and then the price got me out at break even eventually. Yeah, so it hit like 1.8 and started to fall down, and then later I was entering. And by the way, again, you see this 15-minute range is like, and this hidden SD held pretty well, went up, went down, and then we were still operating in the same range but just mitigated deeper zone, and I was okay to try to long it. And this is what I had. Okay, to be honest, I don't remember this trade, so I really don't remember it. It seems like just some weird backtesting based on fakey candles. So let's just keep this trade, okay? Anyway, even if it happened, it went to break even. And this is a trade from this week. Okay, so this was this week, pretty weird one, but again, nothing like too bad happened, just a bunch of break evens. Weird context like NFP week, but we have what we have, and see you in the next week.